everyone. Thanks for joining us for another edition of Texas Insider TV, brought to you by the Texas Alliance of Energy Producers. I'm Jim Cardle. While the Texas special session is proceeding here in the capital of Austin, nationally, Congress has run into some difficulties with Obamacare repeal, tax reform, and Federal Reserve Chairman Janet Yellen made her semi-annual trek to Capitol Hill last week to talk about the future of interest rates. Marc Flaster is a Texas banking consultant and analyst and a frequent guest here on Texas Insider Show, and he has his own predictions about the remainder of 2017, and we're pleased to present you this 2017 mid-year report with Marc Flaster. Marc Flaster, Texas bank analyst and consultant, appreciate your coming in for a 2017 mid-year review today.
Well, Jim, it's always my pleasure, and I'm pleased to be here.
We are into the summer doldrums, but yet up in Washington, D.C., let me just start with asking you this. There's a little uncertainty, and Congress is being put on the hot seat, whether it's for Obamacare and Obama repeal and replace. You got tax reform, you've got NAFTA renegotiation, the president's just been over in Russia. What do you see as the connection or the reaction between what's going on in Washington, D.C. and Main Street economy? Businesses like stability, they like predictability. What's the relationship these days?
Well, the thing that I think we should take as a very positive about the ascendancy of Republican administration is that it's not so much unwinding what went on with Obama and some many things he put in place, but it was a change in focus of how to apply them. And so we're removing some of the constraints that were wrapped around the banking industry. The stress tests have been moved to the larger banks. The capital requirements have been taken away from some of the smaller banks. The review process for mergers and acquisitions was to the point that you couldn't move on anything at any level until we had a decision, we, the government, had an opportunity to make a decision. Well, now they've moved that away and said, as long as you've got the capital worked out, just go ahead and follow the lead that you need to follow. The stock market, in my view, is showing a very positive outlook, because it says, well, if we're not going to have more regulation, and the government isn't, put it this way, we're not having a government that is stressing regulation and looking to let's say, review everything, take control. That said, nothing's going to happen here unless I have my opportunity to review it. That leaves more opportunity for people to take risk or to follow their own lead, and many of these things are very positive. I could take, just for example, major mergers.
Okay.
Let's take the office business. Okay.
Mm-hmm.
They tried to merge the two companies. The government stepped in. Oh, you can't do that. It's anti-competitive. You know how many places you can buy pencils and erasers and staples and what have you? I mean, this kid wasn't going to be anti-competitive. Now what's happened? Well, the company is about to go bankrupt. They were trying to protect themselves. Instead, shareholders have lost a fortune. The market is going to lose an awful lot. Some hedge fund is going to come in and put some of this together and sell off the pieces. But it hasn't been good for business. It's been bad for business. So the XL pipeline. You know what happened to XL pipeline?
What?
Okay, fracking.
I don't know.
Yeah.
So it's not necessarily needed so much to come from the tar sands up in Canada, because we've got the Eagle Ford and the Permian Basin going.
The thing is dead. It's a lost leader. It's going to cost a huge amount of money. It had an opportunity. Whether it could have survived what's happened since then is another question. But
it died based, what you're saying, it died based on the Obama and the Kerry Secretary of State stringing it out for so long. The window closed, and now we've got.
Yeah. By the time that all got through, and the new president came in, he said, "All right, we're going to, let's get this thing going." Well, it went nowhere. It was not to go anywhere anymore.
So let's dig into that, because this is really interesting. You mentioned that. I know we've talked before with you about the liquefied natural gas being exported out of the port of Corpus Christi, which I heard the other day is the fourth largest port in America now. We've got fracking out in West Texas. Is all this going to be on the rebound perhaps for the Texas economy, or are we still looking at some slower growth? You mentioned the Keystone effort. What's the effect of oil and gas other than on the gas tank for travelers during the summer?
Well, Texas economy, is from my view, is booming. Just the ride to today from the Lost Pines back here to taking 71 is just one big construction project. Frisco and Dallas, another big construction project. It's unbelievable. And a lot of that's being driven by, unfortunately, confiscatory tax policy in the states that have managed their position to be entitlement providers.
Therefore, driving citizens to a state like Texas.
Well, driving to provide the revenue to support that. The reason why the Illinois budget didn't get through the governor's office was because he didn't want the tax increase to be permanent.
Okay.
But that's what they did, and so that was a 4.5% increase.
The legislature overrode him and made it permanent.
Yeah, and they made it permanent. And so Massachusetts, Connecticut, I wrote in my piece that in Connecticut, the state has running a $5 billion deficit, and they turned around and said, rather than raise taxes, what we're going to do is we're going to reduce the amount of money that we transferred on a grant, on a block basis, on a grant basis, back to our larger cities, and then they're now in charge of raising taxes to cover the difference. And, well, Connecticut has a declining population. Guess who's leaving? Okay, Maine, declining population. Of course, that has something to do with more part of entitlement, part of it the fact that there's no industry to attract people, so there's a element there of age. But a lot of states, the high tax states, are running through that same problem. Now that I'm on the subject, part of this tax bill that we're now shifting gears, that the fact that they can't get any consensus to go forward on health care, there's talk now that we'll just put that aside, we'll come back to it later, and we'll talk about taxes. Well, you can't talk about taxes until you know what the health care is going to cost, so that means they're both dead. But anyway, in the Mnuchin's ideas and Ryan and those guys.
You're talking about Treasury Secretary Mnuchin and Paul Ryan.
And Paul Ryan and the rest of the group that in there, I guess the cast of six.
Yeah.
That they have in there that one of the ways the government's going to save money is that they're going to make non-deductibility of the state income tax. So if you live in California, New York, Pennsylvania, New Jersey, Massachusetts.
It's a big issue here in Texas as well. Can't deduct your sales tax from the local level at your federal tax returns.
Okay, well, if these taxes are now deductible, so if the government's going to say, well, we're not going to allow the state taxes, which are very high, very high, and you're talking in some cases over 10%, and that can't be deducted, then what happens to all the people who live in those states? I'm going to tell you, Hollywood isn't going to be the same. I assure you.
Which may not necessarily be a bad thing. Folks, I want to thank you again for joining us for this edition of Texas Insider TV, brought to you by the Texas Alliance of Energy Producers. We're visiting with Texas Bank analyst and consultant Marc Flaster. Let's perhaps go from the overall economic into the banking industry. I know you're traveling the state here for literally all week and have your finger on the pulse, but previously, say a year ago, I believe your comments were that Texas banks were awash in cash. Lending was not necessarily too strong. Are banks looking to lend money right now? Interest rates and the Fed are a little bit up in the air. What's the bank lending outlook?
Let's just take the first thing is that all the talk about rising interest rates is you have to step back and say, what are the numbers that you're starting with? When you're talking about 1.5%, 2%,
very good
what's
point.
Another quarter or a third of a percentage point? And so they've got all people just overwhelmed with themselves talking about how do I protect myself against rising interest rates when they're at levels that they haven't seen in generations, at least their own generation. And we've got a state, of course, that we both agree is in a tremendously growth phase for lots of different reasons, and tech is a big piece of it here in Austin. A lot of companies are moving here because of the living costs, because of the ability to get around, to have the morning commute here, that the traffic is only moving at 35 miles an hour on a 60-mile-an-hour highway, which I heard this morning, and said in my neighborhood, traffic doesn't move at all.
There you go.
And it's tied up for hours.
Really?
So to go 2 exits, you might be there for most of the morning.
Really?
Because one accident and it's over. And everyone seems to get up in the morning and say, God, today's the day to have an accident.
Yes.
And they go out to it. So the interesting thing that is that the banks have a lot of money, which they're not paying very much for, which is good. On the other side, we talk about growth in the state, which is at a marginal level, it's very high. But yet there's more money available to lend than there is opportunity. And part of that is the opportunity has been shaded by the government's action into Dodd-Frank and taking control of the bank and saying, you can't lend unless you do it my way, and only in the areas that I think is proper. And so, any family can tell you right away that if you manage your children that way, you're going to have a lot of problems. So here's a government that's been managing its most expressive part of its economic business. As Flaster says, they said, building is supply-driven, it's supply of money. And if you're going to tell me that you can't lend to somebody because it's not your decision, it's coming from another place, and they've made the decision only these kind of investments are for you to get involved in, and we have determined what you can and cannot do, and so you basically shut the economy down, and that's why it suffers. That's one of the reasons why it suffers.
Okay.
Now, we're getting out from underneath that very slowly.
I always like to get your opinion of the commercial real estate markets in some of our metroplexes. So you're saying the Flaster Axiom 101 is building is determined by supply, the supply of money that's available to lend, which is what it takes borrowing to and ready lending capital to do the real estate. What are you seeing in the Houston, the Dallas, Fort Worth metroplex?
Well, Houston suffers.
Commercial markets.
Houston suffers from the collapse of oil prices, because so many small companies, when you had $100 oil, got into that business, and once they get into the business and they saw how large the margin was, they became very expansive, and so they took on more property and more territory, and maybe they went out and bought homes that were beyond what the current resources allowed, but they thought they could live into it. So what you see in real estate in Houston is it's a good market, but it's soft at the top, and the prices are being shaded. Activity is not what the real estate agents, of course, would like it to be. The commercial real estate business, we have all the building going on because the supply of money is available and the interest rates are low, so there's energy on that side. But on the, that's the wrong word to use here, but on the consumption side, you have so much space that has been that can't be absorbed, that's left over. So you have new space coming on, and you have old space that is being allowed to be, that is available, and so that's holding back the lease rates, and it's making some of these projects, I would say, maybe it takes longer for them to be profitable as they would like, but you still got the lender sitting there and says he thinks that it'll make it, and he's supporting his borrower. So whether Houston could absorb all that, I'm not going to say that I know exactly, but the city is growing and people are moving in, and just like we see here, lots of construction activity, lots of people coming to Texas, businesses coming to Texas. The Dallas-Fort Worth area is going crazy, just crazy. Fort Worth, they're putting in new highways. The rentals for commercial real estate have been moved up. D.H. Horton, I understand, moved out of the Bass Brothers building because they raised the rent on them. They said, well, we'll just go build our own building. Really? We don't need to pay you rent. Yeah. And so in terms of time, in terms of let's say success, that nothing can tell you that there's a limit here, as I see in the state. The banks are all doing well. The non-performing loans and the like almost don't exist anymore. They've all been worked out at the hand of government helping do that, so maybe some positive came from that. But the big thing that's going on here in Texas, and I know you want to step onto that, is consolidation.
Mm-hmm.
The state, as one of my partners says, that Texas is a big state, but the banks are small. I gave you a list. There's only 14 banks that are public in the state. In Pennsylvania, almost all the banks are public. I don't care what size they are.
Interesting.
There's 560 independent banks. Many of them in rural areas that they're like little monopolies. They're family owned. There's no line of succession. Family kids don't want it. There's not much business. We mentioned the term we used earlier when we were chatting, a bond bank. They don't make loans because there's no real demand for that.
They just invest their money in treasury bonds or municipals.
They buy bonds. Yeah. Yeah.
How about, speaking of those types of interest rates, Janet Yellen has recently given her mid-year review to Congress, and you have previously discussed the outlook for the Fed's trying to control, speaking of control, interest rates, but yet I guess she's saying now that they're a little more leery of or cautionary about raising interest rates for the remainder of the year, correct?
Well, that's what came out yesterday in her congressional testimony. My view, and those people have been reading the things that I write,
Mm-hmm.
is twofold. One, that the Fed and the people that participate in that sector are academics. Their whole outlook and life has been somewhere contained in some university or Ivy League or Ivy covered atmosphere, and they're very technical in their views. So movement of numbers has more important influence on their thinking than what may have caused those numbers in terms of real life activities. So you have almost an allegiance to two formulas that have to do with unemployment. One is called the Phillips curve, and the other is called NAIR. And basically, both of them in a
That's
different.
very good, by the way.
Okay, both of them in a different way use a formula that says that when there is a tight labor market, then there is a competition on the part of business to buy labor, and that would raise the cost of labor. The cost of labor would then have to be honored in the price matrix of the product or service, and that would create an inflationary bulge, and an inflationary bulge would show up in the indices. And yet, in all these years that we've been going through this period, there has been no inflation. They've targeted even a number of 2%, which is relatively low in scheme of things, and we can't get to that. We're 1.4, 1.7.
Yeah.
The level of unemployment that was used in the NAIRU exercise that would precipitate inflation was 6%. When the unemployment rate dropped below 6, they said it was 5%. When it dropped below 5, it was 4%. Well, we're now down 4.3, and some say it's going to 2 or 3,
Mm-hmm.
3.4 or whatever. Mm-hmm. But the point is that those were formulas that worked in a stable atmosphere. You don't have that anymore. You have businesses that operate in cyberspace. You have people who work off the clock. They're not recorded as employed because they don't have payroll tax. The unemployment tax is not taken out of their salary. So many of the talk about the youngsters today, millennials, whatever they call them, is that they're willing to work and not take a permanent job, but take a job that would provide revenue up to a point which point that doesn't mean that they look for another job, but they said, I've got enough now to do what I want, and I'll spend that, and then I'll come back and visit with you. And so the pool of employees the reason why these indices are falling is that the pool of employees is the denominator is getting smaller.
It's harder to track, certainly.
Yeah, and as you take the thermometers smaller, then it makes the unemployment index come down, right? When in fact, the pool of labor is very large, it's just not being recorded. And they work at a different level. They work in a different manner, put it that way.
Let me jump a little bit and one final question here, because I think it's very interesting as you and I were talking before turning the camera on, and that's this idea of the industry of Trump in the news versus the industry of the economy in the news. Fox and CNN, I think was your point, are making a living off of political scandal and Donald Trump's tweets, but yet in the mainstream economy and Wall Street Journal, it's a totally different question. Talk about that little dynamic if you can.
Well, I think we both agree that the news media is enraptured by the opportunity here to dig in.
Absolutely.
And they're having a great time.
Mm-hmm.
And it seems many of the newsmakers are following this as well, and it appears in front page of everywhere in the nation, whether you pick up the national paper, U.S. Today, or any of the local news.
Mm-hmm.
And so it's entrapped people more of brighter day kind of thing on the television, the serials. But it has very little to do with managing the economy, and it's probably, in some cases, it may even have helped a little bit. The stock market reached a new height, a zenith yesterday, and some of it's coming back from the fact that there's no new things coming out of Washington that are trapping business into thinking they have to come up with new ideas of how to run their business. The pressure of as I mentioned earlier, pressure of the Congress is now to figure out how to manage those laws that were passed during the Obama administration, and they don't seem to be able to eliminate them, but it looks like we're moving to manage them better and remove some of the excesses or remove some areas outside of the vein of that particular law that was put in place.
So what you're saying is, even though we appear to see a lot of question and uncertainty for America based on the political news, if you're a businessman, you're feeling somewhat relieved that there's
better.
less regulation and concern for growing your business.
Sure. It would be like you're running a gas station and you have one pump that isn't working properly, and the government would come in there and give you 40 minutes to fix it. Mm-hmm. Well, so the pump doesn't work, and then everybody seems to get their gasoline, and I'll get around to it.
Yeah. Well, speaking of getting around to things, I know you've got to get down to San Antonio, and we've run out of our time. Appreciate Marc Flaster, Texas Bank consultant and analyst, coming in today for a bit of a 2017 mid-year review. Thanks for your time, Marc.
My pleasure. My pleasure. I look forward to the one thing about Texas, got great air conditioning.
There you go. And folks, thank you for tuning in to this edition of the Texas Insider TV, brought to you by the Texas Alliance of Energy Producers. I'm Jim Cardle, and remember, you're either an insider or you're not. Thanks for joining us.